G'day, Internet. Max right here, and we have our wonderful special guest of the show that we have here regularly, Dr. Jeff Ross. Jeff, thanks so much for being here.
Thanks for having me, Max. I always love being on your show.
Okay, buddy. So, how about you give us a little bit of an update? We've had that since our last chat. We've got the ETFs approved. There's been all kinds of inflows and outflows and restructuring. The price hasn't done a great deal. Give us a little bit of a catch up about what's been happening.
Sure. So I think, in probably anticipated fashion, the spot Bitcoin ETF approval was kind of a buy the rumor, sell the news type event. The price really ran up heading into it, and then it's been sort of disappointing for some people. At least a lot of people were calling for $1 million Bitcoin, based on the hype, which I wasn't really part of that fandom. But so why is the price doing what it's doing? And I hate to continue being this guy. I feel like I've been this guy on your show now for quite a while. I still think we're just in this crabby market. We're in this choppy, sideways, crabby market. Why? For me, it all comes down to liquidity and the global M2 monetary supply. Both of those things are still range bound. I think we've been talking about this every single time on your show for maybe the last year or so. US net liquidity has been range bound since April of 2022, which is going, so I believe we're going on almost 2 years. It's been range bound. It's in the upper end of its range, but still within that range. And then global M2 money supply, at least the version that I use, has been range bound since April 2021. So we're going on 3 years of that being almost range bound. And so I always tell people the oxygen that supplies the risk markets, so risk assets, global assets like mega cap tech stocks, the S&P 500, Bitcoin, even gold, and then also U.S. based stocks. Those are all based on liquidity, and if there is not underlying liquidity rising higher, or the M2 money supply, depending on which one we're talking about, we're not going to see a commensurate rise in these asset prices. So that's just kind of how it works. It's kind of like the oxygen in the room. If there's not enough oxygen in the room, these movements can't continue on. So these continue to chop sideways until both of these things change, or one of these things changes at least. I don't expect much for the price movement. Regarding Bitcoin, since we tend to talk about Bitcoin a lot, I think that Bitcoin is just going to continue to chop sideways. I've been saying for about 9 months that my price target for the halving day, which looks like it's going to be around mid-April, mid to late April. I've been saying 45K by halving day, and I still think that's a reasonable target. I still think we kind of chop sideways. We may ramp up heading into it and then have kind of another disappointment following the halving. That's actually normal. That's what's happened in the past cycles. A lot of people think that instantly ignites a bull market, but usually what happens is everybody gets hyped up leading into it, and then there's that letdown for a few months after the halving, and then the bull market gets started. So my view is that we don't see much of a change in the price of this choppy sideways Bitcoin action until probably this summer, somewhere in August, maybe September or so.
That makes perfect sense. And it's okay to be repetitive if you're right. So no harm, no foul there.
Right.
Okay. Now I think if I understand you correctly, that expecting choppy sideways until second half of this year, and then you're expecting the price to head north. Am I correct?
That's correct.
Now, you've also said that you think price is heavily linked to liquidity. So therefore, I'm assuming you're expecting liquidity to go up in the second half of the year. Is that also true, or it's just the dynamics of Bitcoin driving that price appreciation?
It's uncanny how these things are correlated, and I don't really understand why, because they seem like two completely separate systems, right? The global fiat monetary network and the Bitcoin monetary network are two parallel systems, but they seem to go in conjunction with each other with these waves of liquidity and these waves of Bitcoin price action, price appreciation. So yes, to your point, I think that somewhere within the next 6 months, something will happen that will cause the Federal Reserve and other global central banks to switch, to go from this tightening that they're on. The Fed is still tightening. They're still reducing their balance sheet by the same amount they've been doing. They're pausing the bank term funding program. All of this kind of stuff. They're still saying they're tightening, but it's like QE, not QE, because of these other things like the overnight reverse repo market, which we've talked about before. That's added to liquidity in the system and basically kept net liquidity sideways, chopping sideways for quite a while now. I think something will change in the next 6 months, and the Fed will go from this saying they're doing quantitative tightening to actually doing all-out quantitative easing again. And I think as that catches on, both in the US and around the world, I think China will get on board. I think Europe will get on board, the UK, all these places, and Japan, and then that will start the next cycle higher with risk assets and for Bitcoin as well.
Gotcha. I'll offer a, potential solution here to the mystery of the combining, and this is not my own work. This is kind of stolen from others. But the theory is that 2008 global financial crisis brings about this very unique situation whereby interest rates go to zero almost all across the world, and a whole bunch of companies and a lot of different governments, a lot of different things start borrowing money at this interest rate, and everyone kind of gets in sync at this time. And then what happens is, so the maturity on a lot of these loans, especially these corporate bonds, etc., are around about 5 years. So at the 4-year mark, these people, they've got to go and refinance. They're within 12 months of having to refinance, and things get really tight. They've got to refinance at much higher rates. Things get tough. And so the Fed sees that it's in advance. They come in at lower interest rates again. Everyone gets back on the recycles their debt, and they go again for another 5-year term. And then every 4 years, the panic button gets pressed, and they do that. And apparently, it's just completely happenstantial that it all lines up with the 4-year Bitcoin cycle as well. So you're right, not really linked, but it turns out to be a 4-year cycle that overlays each other. Do you have a similar theory?
I do actually. I think everything got reset during the financial crisis, and then I would say it got reset for a second time during the COVID debacle and the way that was handled. With the huge just crushing of the supply chains, and then this huge fiscal and monetary impulse, not just in the U.S. but around the world. It's been just fascinating to watch, and the correlation with the Bitcoin cycle is interesting. I'm personally of the belief, and this is my tinfoil hat kind of scenario, that the Bitcoin cycle will eventually take over the whole global monetary and financial cycle, and it will dictate the entire cycle because it's growing at this, this power law rate, basically this kind of exponential rate. It'll eventually grow to a size where it will just take over and it will dictate policy for as long as fiat exists, which won't be forever.
Gotcha. So changing gears here a little bit, we got your forecast for the rest of the year. You're expecting sideways until second half of this year, then some fireworks, and that's going to be coincided with, it's going to be post-halving. It's also going to be with the liquidity cycles and an increase in liquidity both globally and in the US. Okay, let's shift gears a little bit and let's talk about Bitcoin adoption. So I picked up on your Twitter feed recently. Why don't you remind people of what your Twitter feed is so they can go ahead and subscribe?
Sure, it's at Vailshire Cap. So you can see Vailshire here at Vailshire Cap. Be careful, there's like hundreds of imposters and I can't stop them, and Twitter's doing nothing to stop them. So just be careful of that and make sure you get the right one.
Cool. So I picked up you talking about the S curve. You're talking, and for those not familiar with it, it's a chart that maps the rate of adoption for new technologies, and it's been true for washing machines and TVs and cell phones and digital cameras and everything else. And the S curve occasionally starts off slow. There's only the really tech geeks who want to play with and tinker with this. Then there's a few more people get involved, and at some points it crosses what they call the chasm, where it hits this inflection point. And there's enough people doing it, there's enough people talking about it, it reaches a point of critical mass where shit just goes vertical, and all of a sudden everyone is using the new technology. I noticed you posted something about that recently, and I think it kind of, if I understood your post correctly, you think we've kind of at that chasm point. Is that fair to say? And do you want to talk a little bit about that?
That is fair, and I sort of agree with what I tweeted, and I sort of don't. The understanding of Bitcoin, I think, around the world is still very low. I would say only about 1% of the world's population actually groks or understands Bitcoin. But the amount of users of Bitcoin, so people get this confused a lot. The number of UTXOs, so the actual Bitcoin addresses, is still fairly low. It's less than 1 billion. I think it's closer to like 150 million or something like that. But what I counter with people who think that that's basically the number of users of Bitcoin is several people can use a single Bitcoin address, right? So you could have, say, for example, a good example of this is one of the spot Bitcoin ETFs, and I should know this offhand, but I don't, maybe VanEck, recently published what their UTXO is so that people can look at their public Bitcoin address and they can say, okay, this is, the amount of Bitcoin we say we have. You can go check for yourself and make sure that you agree that this is how much we have. But what's important to remember is think of how many people own that Bitcoin ETF, and they're all on that single address. So you can have, say, maybe only 150 million to 200 million or so Bitcoin addresses, but you can have 10 or 100 or 1,000 or more people using a single address. This is true for exchanges as well. So that's kind of my point. And then in other ways, people do own Bitcoin indirectly. That Tesla still owns a little bit of Bitcoin, I believe. All of the, MicroStrategy, obviously, Square or Block, which is in the S&P 500, owns Bitcoin. So even if you just own the S&P 500, like VOO or SPY, those popular ETF tickers, you technically own a little bit of Bitcoin. So we can kind of quibble about what that means and who actually has actual ownership, but more and more people have ownership of Bitcoin. And the whole point of my tweet is this is very, very similar to the adoption of the internet back in the 90s. We're still in the stage where people think, okay, it's mostly just nerds and criminals who use it, right? That's how it was back in the 90s. Like, who the heck is ever going to use the internet? It's what's it really going to do? There were some visionaries who understood it way back then, but most of the general population kind of mocked it. They didn't really believe that anything was going to come of it. And then they just that belief got solidified during the dot-com bubble and crash in 2000. I think we're at a similar stage here where everybody has just only believed that Bitcoin is for nerds and criminals. That's what all of the headlines have been saying for the last 15 years or so. But because of this Wall Street adoption, because of Larry Fink going out publicly and talking about it, and because of all these spot Bitcoin ETFs getting approved by the SEC, I think that's where we've crossed the chasm finally from this is just some person's experiment in their garage to this is actually a worldwide phenomenon, and it's taking hold and it's on its way to becoming ubiquitous. So we're going from that early adopter innovator phase to the next wave of adoption. And this is kind of where it starts to get massive, where people start to come on board en masse. And I think by the time we get to 2025 and this bull market is really underway, which is what I think will be happening, I think we're going to really see adoption take off like we haven't seen before. It's going to be pretty impressive, and I think that will be reflected in the price action.
Yeah. And for those of you familiar with the S-curve, that chasm is at quite a predictable point. It typically happens around the 12 to 14% of market penetration. So the numbers that Jeff was putting up there are really important because global population, what are we, somewhere in the order of 7 or 8 billion people?
8 billion, yeah. Mm-hmm.
Yeah. So we would go ahead and take 12 to 14% of that. You end up with something in the order of around about that billion person range. So that's why Jeff's working backwards doing that math, and it's like, okay, we've got 150 million Bitcoin addresses, but how many Bitcoin users do we have? You add up all the people on the ETFs, you add up all the people who just use Coinbase and Kraken as their wallet, then all of a sudden you get pretty close to that billion person mark, which is that real inflection point where things go absolutely ballistic. But also it is like market dependent. So you would say that in the US, if you are closer to that 12 to 14%, but maybe you're only at 5% in some other countries, then you can say that the US is going to take off earlier than the others. So you kind of factor all that in, and you can see that definitely there are some markets that are really, really primed to go ballistic in the next bull market, where just waves upon waves of people start joining the Bitcoin ecosystem. So very, very exciting stuff. What else are you seeing going on in the Bitcoin world, Jeff?
What's for me the exciting part of Bitcoin is what's happening on layer 2. So everybody's arguing about layer 1 and the whole ordinal debate, and we're really seeing in real time the pros and cons of having limited block space. So because of all these people who are fighting for block space usage, the fees are going high. The downside of that is that for adoption, for people who are still trying to use the base layer of Bitcoin, their fees are very high. So if you want to transfer, say, $10 worth of Bitcoin from point A to point B, you have to pay a very high fee, and it's not really worth the cost for doing that for a lot of people. And that's really unfortunate. It actually hampers development and hampers the growth and usage of the Bitcoin network. But on the other hand, what's good about it? Well, first of all, it's really good for the miners. So what I've noticed, which is pretty interesting, is most of the miner CEOs, the C-suites of public Bitcoin miners, they've come out and they're actually kind of in favor of ordinal usage on Bitcoin, because what does that mean? It means really high fees, and they collect those fees as the miners. So I don't blame them, right? For the incentive structure, they are incentivized to like that. They want to see full block space. The other thing that this incentivizes, which is very good, is the growth and the necessity of growth on layer 2. So getting the Lightning Network and getting these other networks that are built on top of the base layer of Bitcoin to grow out and expand as quickly and as efficiently as possible. This is pushing this through at a more rapid, at a more urgent rate. So I love to see that. I have friends that are in that space that kind of work in the private equity side of Bitcoin and that are helping to support the layer 2 stuff. People like Jeff Booth, Lynn Alden, Preston Pish, these guys are all kind of working for Ego Death Capital, and there are similar. Elise Colleen is another gal who's working in this space. They are seeing explosive growth on layer 2 of Bitcoin companies, and to me that's very exciting. That's the kind of stuff that happens, like it's under right in front of our noses, but most people don't realize that. Again, similar, I think, I'm old enough to remember the growth and the build out of the internet. Most people didn't really pay attention to it, didn't really notice what was going on. They thought it was kind of the end of the internet after the dot-com crash in 2000 to 2002. But lo and behold, as everybody was kind of writing it off, it was growing and expanding and becoming ubiquitous around the world. And that's exactly the same thing that's happening with the layer 2s on Bitcoin. So I think it'll just become ubiquitous at some point, probably by the end of this decade, where basically most of the world's population is actually using Bitcoin in some form. They won't understand it. They'll have no idea what we're talking about when we talk about things like layer 1, just like nobody really understands what you're talking about when you say, PC, the HTTP and these different layers of the internet. I don't know what I'm talking about when it comes to these kind of things and how the internet actually works, but I use it every day, all the time. And I think that same thing is going to happen with Bitcoin, that it'll eventually become ubiquitous and people will just start using it because it's really easy to use and it's obviously a better form of money for the world.
Yeah, and I think tying that into our previous conversation, the narrative of the chasm in the S curve, where it makes this jump where all these people come on board. The reason that people come on board is because at about that level, all of the kinks are ironed out. There's been so many users, there's been so much feedback, the developers have improved, they've reiterated their product, and just very consistently across thousands and thousands of different products, like I said, TVs and cell phones and all of it, around about that 12 to 14% adoption. That's the sign that there's, the product's gotten to a point where people can use it easily. And, the tech geeks have solved so many problems that the masses can get on board. If you could go back to the internet, it's like when sending a mail was, required coding, C://
Right.
Only the tech geeks could send emails. But once they got to compose, type, send, all of a sudden people could come on board en masse. And that happened at around about that 12 to 14% adoption. Mm-hmm. Now, you were raising a couple of things in there. I'd love you to provide a couple of definitions for a few words there. The first one is ordinal. What are ordinals on Bitcoin?
Oh yeah, so I'm not a great person to be talking about this, but basically the way to think about it, I think, is, people will say just JPEGs on the Bitcoin network. So these are popular NFTs, non-fungible tokens, those kind of things. You can put these images and capture them and attach them to a Satoshi, a single unit of Bitcoin if you want to, and then that creates its own market. I look at it like it's almost exactly like the baseball card market in the US. Most people I would say in the United States and around the world think that baseball cards are kind of stupid. They're silly. Why would they have value? It's a piece of cardboard that has a picture of some person. Why would that have any more value than just the piece of cardboard? But there's this little group of people that think that these things are awesome, right? They think that if you have the rookie card of LeBron James or Kobe Bryant, or I have a rookie card of Barry Sanders, who was a famous running back, for the Detroit Lions back in the 90s, that's worth something. And so they create their own little nerd market or geek market of value where they say that these are worth something. And you know what? So first of all, I'm into Bitcoin for the fact that it's changed the world money. It literally is better money for a better world. It's super serious. It's going to change. It's like a paradigm shift for the world, as big or even bigger than, electricity or, the combustion engine and cars and replacing horses and carriages, things like that. That's what I'm here for. So I think that most of this whole ordinal business is silliness and nonsense. But on the other hand, people love silliness and they love nonsense and they love to be entertained and they love to gamble, right? There's this multi-billion-dollar industry called casinos in Las Vegas and in Macau and other places around the world. People love to do stuff like that. And that, I think, will always be with us. So because of that, that's why I don't come down too hard against ordinals, even though I think it's kind of goofy and kind of nonsense and it's taking up block space. people are incentivized right now to do that. They're incentivized to fill up the Bitcoin block space with these ordinals and with their little, pet projects that they have on there and their little hobbies. And to that group of people, yes, these probably will have value, right? Another thing is like, well, if you could say you had some Satoshis from maybe one of the originally mined Bitcoin blocks, is that worth more than a regular Satoshi? I would say no. But there's this tiny group of people that'd be like, yeah, man, I'd pay extra for that Satoshi. I'd pay, 0.1 Bitcoin to say I owned, one of the original Satoshis from one of the original blocks. It's just how people are wired. And so I don't come down too hard against it. I think what it's doing, kind of what we talked about earlier, is it's heavily incentivizing the increased build out and adoption of layer two projects and companies. So these companies that are working hard to solve the problem to make basically the exchange of Bitcoin and the transfer of Bitcoin cheap and easy on layer two, they're being strongly incentivized right now to build that out as quickly as possible. So I think it's net good, even though we're going through this period of pain where network fees are really high. Hopefully that makes sense.
That makes perfect sense. I understand it perfectly. It's sort of like just one Satoshi at a time, taking it out of the fungible world of Bitcoin and making certain Satoshis non-fungible, trying to add value to a particular Satoshi along the way. That makes perfect sense. Now, the other term that you've mentioned here a lot is L2 and what's going on in that world. So maybe you want to, with broad strokes, paint the picture of what L2 means and what some of the examples of the most important projects in the world of L2.
Sure. So L2 just is short for layer two. So layer one or L1 of Bitcoin is just the Bitcoin base layer. It's similar to the Swift layer of the US dollar network. So for people who aren't familiar with this, if you want to wire money, you have to use what's called the Swift network. And basically what you're doing is you're saying, hey, I want to wire $50,000 from here to a company in Europe or something like that, or a company somewhere in the US. That goes through this process where it's basically vetted by the US government. They're getting their tentacles in there and they're making sure this is for legal purposes and it's not being used for nefarious purposes. There's a high fee for that. You usually pay about $40 to $50 or so to transfer usually larger sums of money. Why larger sums of money? Because it's clunky and it's slow and it needs to be vetted. It can take like one day, but it can also take up to several days, especially if you try to put this through on a Friday afternoon. The wire probably won't go through until sometime on Monday. So you have to wait. It's a very slow, clunky process. It's really similar to the Bitcoin base layer as well. It's kind of slow. It takes 30 minutes at least to confirm a transaction. The fees, as we talked about, are higher now. You wouldn't want to use the base layer to say, go to Starbucks and buy a $5 coffee. If you do that, it would be slow, clunky, and you'd be paying relatively high transaction fees. So what happens with the US dollar system is this money is layered, right? There's a great book, Layered Money. I think Nick Bhatia wrote that book. It describes this whole process, how all of these monetary systems are built on these layers. You have this base functional layer, and then these easier to use layers are built on top of that. So we can think about, checking and savings accounts at banks, money markets, those kind of things. And then a layer, I would guess I would call it layer 3. On top of that, we have credit card networks like Visa, MasterCard, Discover, those kind of things. They make it easier and easier to use and faster to use, but they're much less secure, right? The Visa doesn't vet every transaction that is made on its platform. And if people want to go and steal a credit card, they can pretty easily. All Visa does is basically say, okay, we're going to cancel that account and we're going to give you a new credit card. There are pros and cons. There's trade-offs as you take away from the security of the base layer and go to the ease of use and speed of these higher layers. Okay, so that's a general, description. That same thing is happening on Bitcoin. The Bitcoin base layer is decentralized, secure. It's unlike any other monetary network, much more secure, I would say, even than the Swift network. And it's totally decentralized because of its proof of work, energy, money function. It doesn't need to have people running it. It kind of runs itself. This is this network that sort of feeds and supports itself, which is pretty amazing. It is clunky though. So if you want to use stuff, you can't go to Starbucks and say, hey, I want to use the base layer and I'm going to pay with Bitcoin and then we're all going to sit here and stand here in line and wait for 30 minutes or more for the transaction to go through to make sure I can have the $5 worth of Bitcoin to buy my coffee, right? Nobody would do that. And so what they're doing is building out these layer 2 solutions, meaning that it's just going to get easier and faster and more efficient to use Bitcoin. There are trade-offs. It's not as secure. It's not decentralized anymore. You're trusting that these layer 2 businesses have your best interests in mind and are trustworthy. So you're trading off for ease of use because of that. So watching that kind of stuff get built out is kind of cool. I'm not an expert. I don't want to claim to be an expert, but I'm sort of friends with the people who are in this space and who are actually doling out money to these companies right now. But I think, the Lightning Network is a great example of this. Fediment is a great example of this. There are other things like this that are getting built out on top of the base layer of Bitcoin that are going to make it much more easy to use for people, going to make it ubiquitous around the world. So people, whatever country you live in, you can just very easily send money. You can use Bitcoin for transactions. I think it's going to gain popularity the most and the most quickly in the countries where the Bitcoin transactions are not taxed. So we're still taxed in the US. If we want to sell Bitcoin to buy anything else, it's a taxable event because it's considered property by the IRS. I think that's not the way it should be viewed. I think it's more correctly to be viewed as like a currency and treated like a currency for tax purposes. So if you go to El Salvador, or I think Puerto Rico, and there's other countries around the world where you can go and spend Bitcoin and it's a non-taxable event. So those countries are good. They're highly incentivized to have these layer 2 solutions get built out quickly. And I think that's where we're going to see a lot of growth.
Yeah, absolutely. I would add to that. I also think it's going to happen in the areas where they have less options in terms of banking solutions and payment rails.
For
As
sure.
privileged first worlders, we have just an avalanche of different payment options. We have credit cards, we have ACH, we have Zelle, we have Venmo, we have PayPal. The list goes on and on and on. The number of second layers so the analogy is that Jeff's given us is that US dollar is the base layer. Then you've got all these layers above it, SWIFT system and credit cards that help us transfer that money. So bring that over to Bitcoin. Bitcoin has this stellar base layer. And just now, as we approach the chasm, we're getting to the point where we're adding in all these L2s, these layer 2s, these different networks, which allow us to make it more user-friendly to help those masses get on board. But so Bitcoin has 2 primary functions, I would say. One is a store of value, and it's a great payment rail. Now, in the first world, we have an avalanche of payment rails, so we don't really need it. We do need the store of values because the US dollar is being debased just like every other currency. But in other parts of the planet, you have huge swaths of the population, 50, 80% of the population that don't even have bank accounts, don't have access to credit cards, don't have access to SWIFT, don't have access to any of this. They have no payment rails. So if Bitcoin can come along and offer ease of use, quick settlement, payment rails, now all of a sudden you've got this excuse in the developing world where there's going to be rapid advancement of these layer 2s because they need it so much more than we do. Everyone needs the store of value, but then those guys really need the payment rails as well. Jeff, awesome conversation with you again. Thank you so much. Anything else you want to add in there about the Bitcoin world before we sign off?
This is a great time to be stacking. Like we talked about at the very beginning, this crabby sideways market is frustrating for people who want the bull market to really get started in earnest. And I'd tell you, just be patient. Like based on the stuff that I'm looking at, I think we have basically another 6 months or so. It's the early February now. I'm kind of targeting August, September, somewhere in that time frame of 2024, where things really start getting exciting again, and we do see a bull market again. So just be patient. You keep your head down, work hard, stack sats, and I think by a year from now and a year and a half from now, you're going to be really glad you did.
Couldn't agree more. Jeff, thank you so much, guys. Hit the like button, hit the subscribe button, and we'll see you all soon.
Thanks.